specialize in providing risk finance to small and medium enterprises. The only industries or sectors we will not get involved in are the following. It's on lending. If you're in the business of taking our funding and on lending it to other parties, then we will not finance your business. The other one that is also excluded is primary agriculture. We will fund people engaged in the agricultural value chain, those who provide seed and inputs to farmers. We will also finance businesses engaged in agro-processing, using the products of primary agriculture and adding value to it. But we do not do primary agriculture. I sometimes jokingly say that if you do primary agriculture, then you are totally and absolutely in the hands of God. And we try not to bet against God. So we try and avoid primary agriculture. There's another exclusion, something that a sector that excludes itself to some extent, and that's mining. It takes a lot more than we can provide to establish a deep underground mine. We do mining, we have done quarrying, which is a form of mining, but we certainly don't do large mining operations. And the reason for that is we have funding limits. Our minimum funding that we will provide to a small business is 500,000, and we go to a maximum of 25 million. So it's a pretty wide range. But they are both very misleading, because our average transaction size is about 2.5 million. So yes, we provide risk capital. Now people often ask me also, what do I mean by providing risk capital? It's simple, and it's often best illustrated by a little example. Assuming you're a good entrepreneur, and you now wish to acquire, where we're sitting is a little pizza outlet, and you wish to acquire this pizza outlet. And to acquire it, as well as the first couple of months of working capital, it's going to cost you R1 million. Assume for one moment that all you have is 100,000 rand and no further assets. If you approach most traditional lenders, say your favorite bank, I have news for you. There's a good chance that you're not going to get the money from them. Because typically banks would look at two things. Over and above assessing the viability of your business, they would look at owner's equity, in other words, own contribution. How much of the money required do you inject into the business yourself? And usually they'd want you to put in about 40% of the money yourself. So if you have 100,000 rand, if that's all you have, you may be excluded. It's a good thing to look for, because the level of owner's equity determines the level of debt in the business, and too low an owner's equity means too high a debt level, and too much debt can kill most businesses. So it's a good reason. That's the first reason they'd probably say no to you. The second reason they would say no to you in that little example we used is, if they found it in their hearts to lend you the 900,000, they would expect you to provide them with collateral which covers their money at least one time, usually. So you've got to either have a house or something else that's worth at least 900,000 on a fire sale basis, and they'll lend you the money at prime plus something. Those are two very important questions: the extent of owner's equity and the level of collateral. We will ask them, but those are not the first questions we will ask. When we look at a transaction, in order to assess whether we should be interested or not, we look at a number of factors. For us, we look at the viability of the business. What do we mean by viability? It's simple. Based on the reasonable assumptions of revenue and expenditure into the future, is this business veering towards being cash flow positive? Of course, we understand there may be months in which it is cash flow negative, for which you have an overdraft facility, but it must veer towards being cash flow positive. Secondly, we do a detailed assessment of the entrepreneur. In our little example, we may say to you, Michelle, we will test you whether you have the technical skills, the doing skills to run a pizza place. Assuming technical skills they are important. We will try and determine whether you have the management skills to manage the business. We will test for integrity. We will look at your entrepreneurial flair, a whole range of things. So we'll test for entrepreneurship. We will also would like to see in place, or some of our funding must go towards putting in place, a system which can receive our funding, spend it wisely, account for every single cent of revenue and expenditure, and by the 20th of the next month, provide us with a set of financial which we will sit down with you, evaluate to determine whether the business is on track or not. And finally, we'd like to get a fair deal.